All right, welcome back. So, in this specific weekly review, I will be doing it in more of a presentation kind of style. And let me know how you feel about this because I feel like this way I'm able to include everything I wanted to mention. So, let's get right into it. So, before I begin, I wanted to reiterate why I did not want to trade this week despite the clean delivery in hindsight. I decided not to trade this week due to three reasons: news events, monthly quarters in terms of quarterly theory, and seasonality of the dollar index. In terms of news, I was not interested in trading as this week was both FOMC and NFP, creating low probability conditions. Reason number two of why I didn't want to trade this week is because, in terms of quarterly theory of the monthly cycles, this week is to be omitted and counted as distortion. This means that this week is not counted as a quarter of the month, and the true Q1 begins November 6th. Last but not least, I do not want to trade bullish regardless, just purely based off of dollar index's seasonality, as indices are typically the inverse of the dollar index. In the beginning of November, I'm expecting bullish dollar index movement, meaning bearish movement or slow bullish movement in the index futures. In a nutshell, as a developing student, I refuse to trade low probability situations that could potentially put me into mental drawdown. Any demo trades taken by me during this week are strictly for study purposes, and I accept that the delivery of price may not be the cleanest. Despite this week delivering quite well, I require more backtesting before developing confidence to trade FOMC and NFP weeks. Now, with that out of the way, starting off in the monthly time frame on November 1st, I am aware that we are now trading in a monthly discounted BISI, or bullish fair value gap, of the monthly impulse range and trading back into an inversion gap being right here. This is all I look at. The monthly time frame is too large to truly dissect for the intraday level. I am just referring to this once a month on the first of every month, typically, to build onto my short-term narrative. Dropping to the weekly chart, I am able to see that within the weekly range, we are in a discount, and I am paying attention to all PD arrays in discount within a bullish range. Keep in mind the higher time frame arrays, as this will be very important when I implement quarterly theory to the equation on my hourly chart. After establishing the range, I strictly use impulse structure, which would be this impulse structure right here, as the range structure is incredibly long term. So next, I will drop down to the daily chart and use my current weekly impulse structure as my daily range structure. With that in mind and marked out, I repeat the same process and mark out my bearish PD arrays in premium. This is where I pay attention to order flow and would like to see PD arrays respected if we are continuing lower into further weekly discount. The reason why I would pay attention to these going lower into the weekly discount is because on the weekly, one of my objectives was actually the BISI right below the new week opening gap, but in this case, it looks like we just straight up reversed off of it. Now that we have our higher time frame narrative, I drop down to the hourly chart to put all the pieces together. At the start of this week, I was initially bearish, expecting price to trade into the BISI residing below the new week opening gap on the weekly, as it also aligned with my projection from last week. What would have made me continue bearish this week is if I saw that Tuesday manipulated higher and that new day opening gaps created all throughout last week and this week's new week opening gap to be traded through bearishly. Instead, the market traded alongside the new week opening gap and inverted last week's Wednesday's new day opening gap. So in this slide, I've removed the other lipstick on my chart and annotated the new day opening gaps and new week opening gaps I was referring to. So here we have last week's Wednesday's new week opening gap. We have current week new week opening gap, and then we have Thursday new day opening gap as well. So here you can see price was trading into it, supports higher, and price trades into the new week opening gap, supports higher, and starts bouncing around the last week Wednesday's new day opening gap, and then we trade lower back into the new week opening gap. And on Tuesday, I see we take London lows, displace higher above the new day opening gap, breaking out of that specified range, and that's why I shifted bullish from this moment on. So I wanted to add one more confluence in my trading, and this is when I see previous day highs or lows consistently purged. Don't quote me on this, but throughout my studies, I have noticed a pattern of when either previous day high or previous day low is purged, it is a good sign that the market is bullish when taking previous day highs and bearish when taking previous day lows consistently. So in this case, you can see the market is only taking previous day highs. One of my reasonings for this occurrence is that the market makers have taken sufficient liquidity on one side of the market and is now engineering liquidity for a later date in the future. In this case, the market makers are engineering sell side liquidity for the sell side of the curve, so all the previous day lows are being left open, where a lot of ICT traders would probably be looking at these, for example, this relative equal low. They're like, why is it not trading back there? Well, maybe that's because we hit previous month or previous week's objective. We've created that smart money reversal and we're on buy side of the curve now. So that's something cool that I found in my studies, and it's just something I've been really looking at. As mentioned on the morning Wednesday outlook, I was looking to the first high on the sell side of the curve, which is this high right here. I was looking for that high to be traded through with displacement before switching bullish, as that impulse would confirm the market structure within my higher time frame context being my daily range structure. So if I have my daily range structure, I'm paying attention to my hourly impulse structure to confirm where we are going right now within that higher time frame context. On Monday, we had a manipulation of the highs, but on Tuesday, the market provided the displacement. So Monday's here, it wicked above this high. I do not count it as a market structure shift. But on Tuesday, once we took London lows, we displaced higher and took out that high and confirmed my bullish bias. With all the supporting confluences to go bullish, my bias was switched. As Monday seemed to be accumulation, I made the discretionary assumption that the Tuesday sell side liquidity purge on the London lows was the manipulation of the week. Because of this assumption, this is where I drew my projections for this week. So looking at Monday, it looks like accumulation to me, bouncing in between the range of the new week open gap and previous Wednesday new day open gap. So because of that, I was looking as accumulation, waiting for that Tuesday manipulation. If we were bearish, I was expecting a run on these highs. If we were bullish, then I was expecting a run on these lows. But instead, what we got was a run on London low and a quick displacement higher, which gave me that reason to go long, essentially. Once I had drew my projections for the week, I was mainly expecting previous week high to be purged this week, and the low-hanging fruit would be the high within the -2 and 2.5 standard deviation. As of right now, it wasn't out of the question to trade into the -4.5 standard deviation, where there was a previous high that resides here and also a daily bearish order block. So from here on out, I would like to see how the hourly impulses react going into next week, as next week is what I'm anticipating to be the Q1 of November. So generally during Q1, I'm expecting either reversal, continuation, or accumulation. And without that information, I'm not super interested in really trying to predict where the market is going as of right now. I'm just going to be aiming for low-hanging fruit going into next week. So thank you for watching. I know this was 11 minutes of your time. So if you guys have any insights on my analysis, then feel free to let me know. And if this helped you in any way, then that's awesome. Have a great day, guys.